What's up, YouTube? Today we're going to cover Matic on TradingView. There's a few things I wanted to cover. A couple things. So this is the 5-day chart. A couple pivotal points and dates that I'd be watching. The end of June for Matic. Okay. And yeah, pretty much this is a fib grid. If you haven't realized, we have another one here on the 8-day with the channel forming. If this is 1, 2, 1, 2, 1, 2, 3, 4, 5, 3, 4, 5 for the third wave. If I was going to label it, it'd be something like this. 1, 2, 3, 4 would come down. Depends how bullish. This one here, let's check the retrace for the rule of alternation. This one hit the, golden ratio, the 61.8, of course. You got to be paying attention for those. Because if you bought it right there at 11 cents, you'd be up so much, right? So anyways, what you'd be looking for is a pullback right here for the 382 because the rule of alternation, which would be about 34 cents. What a huge breakout that we had the other day. So I covered this at about 80 cents for a scalp opportunity right in here in this little zone here. As you can see, if we zoom in, this is a nice little bull flag, right? Kind of looks like a bull flag on this chart as well. But yeah, right here, there's a 3-day, boom, 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 bang. So it's all about volume at this point. It's like, yo, supply demand. If you guys know fundamental of Matics, okay, people are holding this because they're staking it and they're accumulating coins. Basically, it's their interest, right? So you stake it, you hold it, and they give you more Matics. You might be able to request USDT. I'm not sure, but you make more when you hold Matics. Huge interest. Okay, so that just increases the supply for the holders. If you're strong hands, of course you're going to hold it. But if it's down 50% from the highs, because you got to think about the hedge funds, the institutions, these guys are going to hold it, but everyone buys something to sell it. You buy something to sell it. It's just what it is, right? You buy a stock in order to sell it higher, make money off of it. So at some point there's going to be someone selling, and you got to know where the possibilities where they're going to sell it. So this is like one of those Fibonacci grids. I'd probably pull this one as well on a higher time frame there. Yeah, this one probably works even better. Let's go to a larger time frame. Kind of, I should be doing this on my own time there, but look at even this one. Boom, bull flag, boom. This is all Matic does. Bull flag, bull flag, bull flag. So it's amazing, really. I wonder if I went like this in 17 bars. You see that? 17 bars. This is the 34-day chart. It's all about the patterns, right? If I went to the 34-minute chart, whoops, 34, I wonder, I said 17 bars, right? Let's go back in the past and see if it's 17 bars. 59 bars. But yeah, bull flag after bull flag, this thing, right? This is kind of a bull flag. It's an average move. But yeah, okay, so the 39 is out the window, I would say. But yeah, that's how we check patterns. Anyways, bull flag. It breaks out of the bull flag. There's a few things I would add to this chart on this fib grid. Hold on. Maybe I'll use the 144. Yeah, this one right here. So I like, whoops, these time frames. They're pretty good. This one, this one, this one. Okay, that's so far. You know, we're talking like $3 up here on the 144. The 34 is talking like $2.17. Okay. And we all know like you want to buy it to sell it, right? You want to make profits. So let's go on a lower time frame and kind of like gauge the supply and demand of this thing. So right here, January, they started accumulating. Bull flag broke out with large volume. Whoever sold here, you know, broke out after crossing the top of it on the same amount of volume and then just started trending upwards. I also love my moving averages strategy right here, EMAs. The bulls are going to be defending that. I take off the VWAP. Okay, the 2 days is a good chart to watch it as well. So the bulls, they defend this. The code of the markets, man. The DNA, the structure. Okay. So yeah, they defend this, the closes and stuff like that. Okay. So here's the 2 day chart. We did get that breakout. Bull flag on low volume, low sell volume, and then a continuation upwards. So yeah, we'd have to say that there's going to be a decent stop loss right here, underneath here. That's like at 67. And then the bulls are going to try to really defend this white EMA, and definitely this one right here. Okay, but if we count the waves on Elliott's, if we count this as 1 2 1 2 3 4 5, this is maybe a 1 2 3 4 5. Okay, so there might be a nice little pullback, another one for the wave 4 of the 3 1 2 1 2 3 4 5. This would be the 5 of the 3. If we go ahead and take a look at this one here, this is pulled back at the 61.8. How beautiful the Elliott waves patterns. Okay, how beautiful. So the pullback would be pretty substantial here, but I'd expect it to go up a little bit more so that these bulls have a better understanding, you know. So that's like $5 up here. This is log scale though, by the way. So let's go ahead and take it off of log. Let's go. Although that might affect the ratio down there. So let's take a look at the ratio down there. Okay, zoom in here. Yeah. Where's the log scale? Yeah, this one. Honestly, I don't really know why I post these videos, but they're kind of motivating for myself to do the right actions, you know, to chart it and to find the waves. So you can see the log scale versus non-log scale. Hit the Fibonacci, you know, 61.8 for wave 2 and continues upwards. So I'm not sure if I would use log scale or not, but I think log scale is fine on this guy. Right? So anyways, we're trying to find like what's a decent price level. So is it like right now? That means the wave 4 would have to pull back about 80%. Does that make sense? Does that make sense? 1 2 1 2 3 4 5, right? 1 2 1 2 3 4 5 1 2 3 4 5, and this is of the small one. So this would be your 1 2 1 2 1 2 3 4 5. This is of the 3. So I'm expecting something like this, okay? I put a 2 3 4 5, your 4 coming downwards like that, I'd expect it to pull back all the way to the 382, but you see these moving averages, they're so bullish. So I'm not sure. I'm not sure. And then something like that for the 5. But that's not really proportionate, to be quite honest. So I'll be watching Matic, eh? That's why I like price, and I put an emphasis on time, because I think time is more appropriate than trying to guess waves. Although I do have waves on my list because it has structure. Like some people just count them like this: 1, 2, 3, 4, 5, right? The swings: 1, 2, 3, 4, 5, 6, 7, 8, 9, and then it tops on the 9th. They look for divergences in the RSI. And yeah, so this is the lower time frame stuff right here. Let's go even lower. Again with the bull flag on low volume. That's kind of the chart that I'd probably be watching, is the 30-minute chart. I want to see some big sell volume versus low sell volume. I want to see if the market makers are going to come in here and start selling. I used to have a volume indicator where I can actually check how much exactly. I can put it on a pane below and take a look, because there's only about 160 million of these things. Here, let me check that for you. Right? So if these guys are selling at the top and people are holding, they're going to be bag holders, and they're going to unfortunately get wrecked, because that's just how the markets work. You know, so you need to have a substantial amount though sold at the top or within the trend. But let's see, Matic. It's actually called Polygon. A couple weeks ago, Matic rebranded to Polygon, and I called it in the group, in the Discord, that it's a marketing scheme. It's a marketing shenanigan, you know? It's what the market makers do to try to entice new buyers. And it makes sense. If you go on the daily chart, these guys bought at an average price of 34 cents, right? All here, this is where they bought. So of course they want to. So there's 6 billion circulating, and the total supply is 10 billion. Okay, 10 billion. So about 60% of it is mined, whatever. And there's only 3 billion in this candle. There's 10 billion total supply. Candles up 60%. This one here, there was a lot more than that. It's just a trading activity. This is the spot exchange, by the way. So I'm trying to get this number. So 6 billion right there. That's the total supply right here, just in this one candle. So the bulls pushed through all that supply. How does that make sense? That's how we got to wrap our heads around that. So someone's buying it here. So that's bullish. That someone's trying to buy it at 50 cents. Or was it selling? So let's actually take a look here. Yeah, see, it was selling. That's the thing. That's the problem. It was selling. It was huge resistance, and someone, I don't know who. You think this is market makers or the public buying this one right here? I think it's going to be honestly, like, is there a way to get that information? Because look, recent breakout, probably the public. A recent breakout, everyone panics, and then you have a doji candle with huge 1.4 million in volume. So it consolidates both flags and then comes upwards again with the same type of breakout, and then they start selling. Okay, so came down. This is a big volume. So I honestly would put a stop loss right there at 93, because some people are still buying this. They're probably over trading it. So 6 billion on total market cap. We also have this channel type of thing, couple resistances above. I'm wondering when the market makers are going to sell, if they're not out already, you know, because every little breakout they seem to sell a little bit, right? Came back down, and they don't want to kill the whole quote, the whole idea is that they don't want to kill the goose that lays the golden egg. That's the little mantra. They don't want to kill the goose that what's it called? Fucking hatches the golden egg. So they're not going to completely break it down because they need to sell it high. So they'll defend this moving average. Defend. They do sell it. It broke out. They sell it. Boom. People start selling hard, and then they defend it here when there's not a lot of supply. This is a good test. Boom. It breaks out here. Do they sell it? Yeah, we do see a lot of selling. Okay. It gets absorbed here on the 8th EMA, which is actually pretty surprising. What does that tell you? 1, 2, 3, 4, maybe 5. I think that's how the bots count them. You have to think like market makers bots. I think that's how they count them on the EMAs. 1, 2, 3, 4, 5. You know, like how many bounces on an EMA. I don't think they actually look at the waves like that because it's a little bit harder. That's more human, but they do it more systematic, and I think they do it on the EMAs. I'm pretty sure. So like 1, 2, 1, 2, 3. There's going to be a 4 that touches this moving average, and we're going to see if it's going to get defended or smashed. That's how the markets they work. They seem to work. Okay. So breakout. They started selling. They break out again, and this is like a runaway market or what? 25% on the past 8 hours. It's coming down on low volume right now. It wants to test that 8 EMA, and I'm pretty much going to end the video right here. Let's go to a lower time frame so we can see that the bull flag's a little bit cleaner. Wow, these EMAs are so gold. You know, 80% and 55%. Wow. This is such a good coin to trade. Fibs. Look at this. 55, 58, 59. That's a fib number, right? And so it comes back down, pulls back. I use this strategy, but it's hard to always think like this. I just remembered it. It's one of Gann's strategies that he uses for resistance levels. So another 55, 58, 59 is the same bounce. So we can expect the same thing to happen if coming down to 21. Probably. Something like this. So 22. Right? This is only 18. And 22 would hit that 34. And off to the races to see if it's going to be big volume or small volume. But yeah, this, what is this, a 2-hour chart? This is probably the lowest time frame that I'd go on this cycle. To be honest, it's not even this one, it's this one right here. But it's not like it really, it's just, you know, to be more technical. Yeah, the 2 hours is probably better, to be honest. You don't want to be in every 30 minutes there. 2 hours is good. That's where the astrological sign changes. You got 12 signs. You got 12 signs. Every 2 hours you change into a different sign. It's the energy of the sun. That's a really good topic to study, but the information is hard to find, hard to get, especially when it comes to stock market. But yeah, they use that stuff too. And that's the market makers, man. They use your emotions, FOMO, fear of missing out, fear of loss, and greed, desire for gain. They use it against you, and they know how the sun works or whatever, the day of the month, where, okay, I'm gonna go ahead and put my whole life savings on the line, you know? It's really that serious. You know, those are called fools. Those are called fools, believe it or not, when they don't know what the astrology thing is. And to be honest, I don't have that knowledge. So yeah, you got to get on that astrology knowledge. So that's pretty much it for this video. I hope you guys like and subscribe to this channel. Hopefully, later, in due time, I will have quality videos. I'm still studying Pine scripting. I'm still trading pretty well, actually, the past couple of weeks when it comes to the account growth. Pretty well, trading pretty safe, still learning. But I'm thinking like, okay, maybe we should swing trade a little bit, right? So building strategies for swing trading is just the stop loss. It's a lot larger. Not necessarily. Look at this one right here. Could have swung that one for 50%. It's up 100% from that touch. So we got to understand. I asked this guy, this Pine script coder, I asked him, hey, buddy, can you flip inverse this moving average? He said, yeah. Where's the work? Let's see it. I don't see it. I want to see this moving average flipped, because if we can have a band on this, imagine how great that would be. I see it. I know it's possible. It's just this number, inverse, flip. I ask a bunch of coders. You know what coders do? I'm going to show you. They don't do shit, man. These guys don't work. Maybe they work, but they don't like share your stuff. Everyone's trying to ask questions, ask questions like, where's the business? Where's the stuff? All they care about is like, I don't know, man. So yeah, that's what I got for this right now. Okay, scripting is really good, and it's all about timing. You hit the time and you buy it. You hit the time and then you buy it. Right now, is it the time? I would say no. This is Gan's little strategy here. The average retracement, guys. I spent like hundreds and if not thousands of dollars for this knowledge, and hundreds of hours to study technical analysis. So it hits the bottom right here and goes upwards. It's pretty much that simple. And I'd be interested in a retracement. Okay. This is kind of an abnormal move, because in the trend we don't really, well, actually we did get a pullback right here, right? And no pullback here. Okay, let's see if this one was the same. I took this from this range. Here's a little tip for you guys. This one's the same time, but the price is different. Gan says that time is more important than price, okay, when it comes to this stuff here. So the same time, but different price. Okay, so this one is a little bit different. So, and how many waves like that can you expect? How many waves like that can you expect? It's a good question. 5. Gan counts waves a little bit differently. He counts them like this. Okay, he says 1. That's the impulse. That's the first move, and then he counts A, B. That's 2. A, B. That's 3. A, B. That's 4. And usually there's not 5. So yeah, that's how he counts it. So 1, A, B, 2, A, B, 3. There's either 3 or 4. And then there's like, that's where all the supply is like, oh, we're overloaded. We're overpacked. There's no more buyers. We need to sell. So they'd be selling. Look at this candle right here on the 2 hour. Let's take a look at like how much volume using common sense, if they're really selling it. So 60 million is not that much, but can it hurt the market? You know what I mean? Like, is there any more demand? Yes, there's probably more demand. 1, 2. So if this is your impulse, and then he would basically base off the resistances off this impulse, I would say, but this is a smaller one, right? So you'd have to go right here to the, so 1, A, B, 2, A, B, 3, A, B, 4. So that's like one like that. If you go zoom out to the 8, hour chart, and I just look for the swings once again. So there's your pullback. I kind of be looking for something like this. I don't know if this is right. I'm just kind of like testing the waters here, but I'm not sure, to be honest. Like that. So it's like a trailing stop loss. These guys are going down like 10%. 10% the past couple. So yeah, here's a video for you guys. 25 minutes on Matic. And talk about supply demand, talk about volume profile, talk about, you know, market makers, strategies, all that kind of stuff. Hope you guys like it. I hope to bring you guys more content, more information that's going to help you with your trading, with your investing. And I hope to simplify and to organize good strategies for us to all profit in the market. Happy Friday. Happy 411, my favorite number. Peace.